For over a decade, Amigo Loans was a major player in the UK's subprime lending market, specializing in guarantor loans. The model was simple. A borrower with a poor credit history could get a loan if a family member or friend with a better credit score agreed to be a guarantor, promising to step in and make payments if the borrower defaulted. This business model was highly profitable for Amigo. The downfall of Amigo began with a surge in customer complaints and regulatory scrutiny. The Financial Conduct Authority, FCA, launched an investigation into Amigo's lending practices, finding that between November 2018 and March 2020, the company failed to perform adequate affordability checks on both borrowers and guarantors. This led to a high risk of consumer harm, as loans were given to people who couldn't afford them, forcing guarantors to bear the financial burden. The FCA eventually fined Amigo £72.9 million, but waived the fine because the company was on the brink of collapse. Faced with a massive wave of compensation claims from missold customers, Amigo attempted to propose a scheme of arrangement to cap the amount of money it would have to pay out. The first attempt in May 2021 was rejected by the High Court, which sided with the FCA's argument that the proposed scheme was unfair to customers. The court stated that it would likely not lead to the company's imminent insolvency. In May 2022, after a second, revised proposal was put forward, the High Court finally approved a new scheme. This new scheme aimed to provide some level of redress to customers, but it was made clear that if the company were to go into administration, customers would likely get nothing. Customers were given a deadline to make claims, and a small percentage of their total claim amount was paid out. Despite the approved scheme, Amigo struggled to raise the necessary capital to continue trading and pay its compensation liabilities. The company ceased all new lending and, in January 2023, announced its intention to wind down and ultimately liquidate the business. In March 2023, the High Court formally approved the company's liquidation plan. Amigo's story serves as a cautionary tale of a business model that, while initially successful, was found to be at odds with fair and responsible lending practices. The company's collapse was a direct result of its failure to protect vulnerable customers, ultimately leading to its inability to survive under the weight of regulatory action and compensation claims.